It's been another wild start to the week, and indexes are down a little over 3% as I'm recording on Monday. I'm recording this in the afternoon. We got about an hour and a half left in trading. But I wanted to go through the reason that the market is so concerned right now. When there's a massive sell-off like this, it's not just one thing that's going on. Yes, everything is sort of centered around tariffs, but there's a lot of indicators that the market is really concerned about. And a lot of those go to the bond market and currency fluctuations and things like that, things that we don't typically think about as stock investors. But I want to go through a few things that you might want to keep an eye on in the future because these could be headwinds for the stock market and for the US economy, particularly long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go through just a high level look at what's going on with the market. This is just Google Finance. You can see that the Dow Jones Industrial Average is down 3.1% for the day. That's a huge move for the Dow. S&P 500 down 3.2%. For the year, we're now down 13.1%. So we are in correction territory, not quite bear market territory. The NASDAQ composite is down 18.6% for the year. But if you look at from their peak, down 22%, that means the NASDAQ is now in what you would call bear market territory. But what are the drivers today? The biggest thing to look at is the dollar. The dollar just fell off a cliff this morning. It is April 21st. So you can see this is a sharp decline from trading on Friday. This was indicated in trading that happened or futures trading that happened late on Sunday, early on Monday morning. So down 1.1%. And let's put this into a little bit of context. You can see that over the past month, the dollar index has gone from 104.33 to 98.26. The dollar itself does not typically move that much. What that's telling you is that the dollar is getting weaker. When the dollar gets weaker, it's more expensive to buy things from overseas for people who are spending in the US dollar. So US consumers spending US dollars. So your dollar isn't going to go as far. You're not going to maybe buy as much, not as many imported goods. That's going to be the short-term impact. You compound that with tariffs that we've seen. So 20% blanket tariffs and then higher tariffs than that. I don't know what we're at, 145%, 800%, whatever it is in China. But this is going to mean that the US consumer can simply buy less. And if you go all the way back to year to date, you can see that this index is down about 10%. So that is a huge move and a huge decline in the US dollar. That's really the concern. The other concern, and this is sort of the opposite of what you would expect. The dollar gets weaker. You would think that people would want to invest in more things in the United States. That hasn't been the case. This is the America's 10-year government bonds. This is from Bloomberg. You can see that over the past month, the United States 10-year yield has gone up 16 basis points, 0.16%. That means that the value of a bond, of a 10-year bond, has gone down in value. What's happened in Europe, Middle East, and Africa? All of their bond yields have gone down. Germany's bond yields significantly lower than US right now. UK is basically on par with the US. Italy, Spain, France, all lower yields than the US. The flight to safety is no longer to the US dollar and to treasuries. And that is a huge mindset shift for investors all around the world. Now, the challenge is we haven't seen all of these currency fluctuations and interest rate changes make their way to hard data yet. Even the tariffs hasn't really made its way to hard data, what the GDP is, what employment looks like, because a lot of those changes were made early in April, especially around tariffs. And then the market's reaction has happened throughout April. So we've gotten what you would call soft data. The producer sentiment, this is from Purdue University. You can see that this is farmer sentiment. So the ag economy, so this is what they call the ag economy barometer. Their sentiment fell 12 points to 140, down from 152 a month earlier. The University of Michigan's survey of consumers shows that consumers are expecting higher unemployment. They're expecting a recession. Index of consumer sentiment in April 2025, that's 50.8. A month earlier, just a month earlier, 57. A year ago, it was 77.2. So that is a massive and very quick decline in consumer sentiment. Index of consumer expectations also down sharply. That would be kind of consumers look at what they think is going to happen in the future. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So you add all these things together, and the market is really concerned about what the future looks like. When the yields go up, it makes it harder to buy a home. It makes it harder to take out money to buy a business. It makes it harder for the government to borrow money, or more expensive for the government to buy money. When the dollar is down, it makes it more costly for Americans to buy stuff, whether that's consumers or businesses. Tariffs make both of these things worse. And remember that the stock market is forward looking. So they're going to be looking at what are earnings going to look like in the future? What is revenue and GDP growth going to look like in the future? We don't have a lot of the hard data yet, but the soft data is starting to tell us that those numbers probably aren't going to be very good. Now, the big uncertainty of all of this is what's going to happen with the future of tariffs. But it seems like, based on everything that we know today, the current tariffs that are in place are going to be in place at least for the foreseeable future. It doesn't look like anyone's crawling to the table looking for tariff deals or trade deals to make with the Trump administration. And that puts both the Trump administration and the market and the economy in a very tough position. It means that a lot of businesses may just kind of close up shop and say, you know what, we're not going to make investment decisions. We're not going to decide to invest in that new plant. We're not going to hire more people. Consumers are going to do the exact same thing on an individual basis. That's how recessions get started. When recessions get started, it's like a ball rolling downhill. One thing happens, which leads to another and another and another, and everyone is making logical decisions in this time frame. But it's a downward spiral for the economy as a whole. And right now, that's the market's fear. That's why stocks are dropping the way that they are, both on Monday and then over the past couple of months, is because the market is fearing that the US economy in particular is going into a recession or may already be in a recession. The earnings are not going to be what they expect. You combine that with the high prices and the high price to earnings multiples that we've seen from the market overall that has been record highs outside of a couple of periods actually during recessionary times. But for a non-recessionary period, this was the highest price to earnings multiple for the S&P 500 that we've ever seen on record. You add that to the mix and the stock market falls the way that we've seen over the past few weeks. And I wouldn't be surprised to see it fall further because some of these economic indicators and this confidence in the US dollar and treasuries and everything and the rise in bond yields, this is all negative for the US economy and for stock prices. So you may not watch things like yields, you may not watch things like the US dollar, but that's going to be a big indicator for what's going to happen with the stock market over the next few months. Let me know what you think about the market today. What do you think is moving your stocks? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.